Hello, everyone. It is Romeo. Look at A Mary, guys. If you do not know me, I need you to first subscribe to me. I need you to go follow me everywhere. Mary Goddess. MARITHEGODESS into number twos. Guess I know it's Wendy and Goddess. That's how I want it to be. All right, we all smart with it. Okay. If you do not know me, I'm 31 years old. I'm a mother, businesswoman, and I plot things legally. And I'm always here to teach you how. Um, I trade the foreign exchange market or the forex market, which is the largest financial market that there is. It runs 24/5. Okay. There's two different types of ways to trade forex. One is by fundamental analysis, and one is by technical analysis. I'm a technical analysis trader, where we look at price previous movements and patterns and predict what may happen next. Oh my gosh. Like we're really getting this on camera right now. Hello. Okay, even nature loves me. That's right. No, but actually, one of my technical tools that I use is the candlestick, the Japanese candlesticks. Okay, I teach off the candlesticks. Come on, and this is how you landed with me. So if you landed with me, we now together. We're now in a relationship. Okay. All right, you're mine, and I'm yours. I'm just playing. Okay, that's somebody don't play about me. Um, no, but you are a part of me, and I am a part of you, and we are. This is why. This is why I like the back versus the front because everybody knows you're trying to figure out like what is this girl doing? Why is she recording? Okay, you on the back, no one knows who I am. But I trade the Japanese candlesticks. I teach the Japanese candlesticks. This is why you're here. Make sure you follow me. Make sure that you subscribe to me. Let's get it. Before we get it, I gotta talk to my people who's been rocking with me for the longest. Where y'all been? Hey, how y'all doing? Happy Juneteenth. Okay, so when this comes out, it won't be Juneteenth. But however, it's Juneteenth now. All right, happy Juneteenth, my people. What y'all doing today? How are y'all celebrating today? Okay, what is going on? Okay, and also January, February, I am nosy, so I'm working on that. All right, let's see. People who've been here, welcome to the craziness. Okay, welcome back, y'all. Um, my one of my phone cases came in. Okay, so I brought five phone cases from Sheen, right? Shein, whoever she is. Okay, kind of like that one. Out of the five, I like only three of them. I want to get my money back for the other two if I could, but I don't even complain it. Okay, they all were under less than $20, so I can switch up. So that's a blessing, right? Uh, yeah, let's get it. Oh wait, before I get it, y'all, because I need to catch y'all up on what's been going on. My spiel, hey, I'm a mom, I'm a businesswoman, and I basically I need that to be upgraded, guys. Okay, I need y'all to say a special prayer for me because your girl needs her last name changed. Okay, look at that. Look at that sun and that glow. Yes, it's coming. It's coming. Just stay patient, Ramira. It's coming. Getting everything that you want. It's coming. Keep going. Keep going. All right, let's get into it because I'm not about, I ain't about to do this with y'all. I'm not about to do this with y'all. All right. If this is your first time joining and you have no knowledge on Forex, on trading, anything, you are in the right place. However, you're just at the wrong video. I need you to stop watching this video. But before you go, here are some things that I need to give to you. If you have not downloaded this is a free download on any of your internet browsers. If you cannot find it because the people that I was promoting to no longer has that link open and out, I need you to reach out to me. I got you. All right. But when you do get this, I need you to go over the introduction and overview and the history of the candlesticks. I do not have a recent video over these things. So I need you to read it, but don't skip up on this part because this is vital information why candlesticks is important. All right. What is a candlestick? You go over the candlestick patterns. Uh, Market structure, top-down analysis. We've been into the trading tactics already. Starting with the pin bar, we have just completed that, and now we're inside the engulfing bar candlestick pattern. Do not rush this process. Okay, this is your own lane. This is your own journey. Okay. I need you to, if this takes you days, if this takes you weeks, if this takes you months to train your eyes to get this, to get it down packed, okay? Also, this is not like no closed book test. You have this tool in front of you. Use it while you're marking up the charts. Use it while you're identifying those engulfing patterns. I mean, those candlestick patterns, okay? When you learning market structure, okay? Take your time, train your eyes. All right. Um, so yes, and when you get here, you'll be right on time. You'll be right where you need to be. However, that time invest not maybe for you at this time. But when you get here, it's gonna be your time, right? It's gonna be your time. All right, go ahead. Make sure you subscribe and come back though. Hey, it gets better when you reach this point. Okay, wait till you see my previous videos. You're gonna be like, oh, she's leading up to the craziness. Okay. All right, Rod, I love you. If this is the video that you actually need, that you need to get over, I hope you got your market structure down packed. If you don't, go watch those previous videos so you can get it. I really feel like this one car, it keeps going back and forth, but I'm gonna check one more time because now I have the model in the make. And I'm about to go in the back or something. See, that is why we locked in now. We gang. You a part of me. We relationship. We in a relationship, okay? We in a learning relationship. Let me put that out there, cause I don't want nobody talking about, hey, I'm in a relationship with Mary. Okay, get my wig split, cause I don't even know who he is. All right. All right, so trading the engulfing bar with moving averages. Trading the engulfing bar pattern with moving averages provide a very profitable trading strategy. However, the lack of knowledge about using moving average can damage dramatically your trading account. Traders use moving averages in different ways. As a trend following tool to identify the direction of the trend, so they buy the market when prices are above 200 simple moving average, and they sell the market when it's below the 200 simple moving average. Right. So here's one way that they use moving averages using the 200 simple moving average. All right. I showed you in the last previous videos on how to use the moving averages and how to turn it on and how to edit. I will do that. I should be able to do that with you guys. All right, to determine whether the market is overbought or oversold, we just watch how price interacts with moving averages. For example, in an uptrend, if price moves far from the moving average, this is an indication that the market is overbought. All right. All right. All right, to predict the trend, change by using the crossover strategy. If the moving average crosses over another, it's a signal of a trend reversal. All right. Um, as a trading system, as any trading system, the moving averages have disadvantages. This is why you have to this is why you have to know how to use it successfully under the right market conditions. This trading technical tool doesn't apply to all markets. Don't never try to use it in range bound or untradable markets. Okay. All right, because you will get a lot of false signals and you will uh definitely blow up your trading account. Blow up your trading account. Okay. You're gonna blow it up. All right. To the best of my knowledge, using moving average as a dynamic support and resistance in trading markets in combination with an engulfing bar pattern signal is the perfect way to make money in the market. All right. The strategy is very simple. We use the 21 and the 8 moving averages in the daily and 4 hour time frames. Okay. This is his strategy. We will define a clear bullish or bearish market, and we will simply buy when price pullbacks to the moving average and the golfing bar pattern forms. Right? See the illustration below. Right? They're using a 21 and an 8 moving average. Sorry. All right, we would define a clear bullish or bearish market if it's trending up or trending down. So 21 moving average, market structure. All right, and then when price pulls back to the moving average and the engulfing bar pattern forms. All right. Conversely, if the moving average is trending down, it shows that the market is in a downtrend. We sell when price retraces to the moving average. The screenshot below shows how price interacts with moving average as a dynamic resistance level and how the engulfing bar pattern represented a high probability setup. Right? Okay. So let's just go. So I'm thinking that because there's also like a maybe a lawn cutting service. It is why I'm nosy. Maybe they lost because they came back and they came back again and then they're leaving again. See, I'll be, hey, let me scope the see. January, February. I don't know if I was teaching on, no, we were teaching on EU. No, we were teaching on AUD, USD, right? Yep. So we're gonna get another indicator, the simple moving average. Moving, you can put SMA, but it's still gonna come up. All right, so just put that on. We already got the 21. Then he said that he uses the 8 moving average. That's not okay. Here we got a bearish engulfing right here. You may have missed that. All right, so just ignoring these two because I know we used these in the previous video. All right, so what did they say? This strategy is very simple. We use the 21 and the 8 moving averages in the daily and the 4 hour time frames. We define a clear uptrend or downtrend. Oh, sorry, y'all. We was in a 4 hour. I mean, we was on a 1 hour time frame. No, that's still a bearish engulfing right here. And here. Let's see where. All right, we define a clear bullish or bearish market. So, of course, we know it's giving us lower lows and lower highs in the market. I think I'm just going to use this example. I'm going to turn off support and resistant lines because I don't want to confuse you guys, because all we're talking about is a simple moving average. We're talking about market structure. Okay, we can see the market structure. Lower lows and lower highs are being formed as the market. All right. Then the bearish engulfing is formed and she sells down. All right. So 21 or 8 simple moving averages. Well, and the simple moving averages in the daily in the 4 hour time frame. We seen if it was a bullish or bearish. In this example that we just did, it was a bearish market. We simply buy or sell when price pulls back to the moving average. All right, pull back. We see where it pulls back at. All right, lower lows, previous seeing point, the break, the retracement happens, or the pullback happens, or the corrective move happens. Bearish engulfing is formed, and then she sells down. Okay, and the closer it is to that moving average, the better your entries. All right, let's see if I can try to find this in an uptrend for you guys. And then we're gonna move on to the next thing. So we do have some bullish engulfings that are here, but not to confuse you. We see the moving averages acting as a support. The retracement or the pullback happens. The bullish engulfing is formed. Okay. It kind of doesn't look like one. However, it does engulf the previous candle. Right? Um, I'm pretty sure we'll hang. Hold on, let me go back. Data point not available. I can't go on the 4 hour. What price breaks the previous swing points, then comes back to trace, or the corrective move or the pullback happens? We're close to those 8 and that 21 simple moving average, and then price goes up. However, we couldn't do that on the 4 hour time frame. Okay, all right, just that simple. All right, so how to trade the engulfing bar with Fibonacci retracement. All right, so first we talked about moving averages, the simple moving averages. Or if you want me to turn on, or if you want to just turn on 200 simple moving average, just change your lift. Okay. Oh, look at this, baby. When it's above, you buy. When it's below, you're selling. When it's close to it, yeah. All right, so this may be close to a buy. I think I need price to come down some more, and then we can get into a buy. That's if AUD USD would like to change or structure. All right, but we ain't talking about that right now. But that's how you would have did the simple moving average 200. Okay. I'm going to turn off the simple moving averages because now we're about to talk about Fibonacci retracement. So let's get into that. All right. Traders use Fibonacci retracement in different ways. However, the most important Fibonacci retracement levels are the 50% and the 61%. Fibonacci retracement, knowing how to use the tool in conjunction with Japanese candlesticks, would definitely maximize your profit potential. What's going on here, guys? According to the chart technicians, the most major moves retrace around 50 to 61% Fibonacci retracement. This knowledge will provide you with the ability to predict with high accuracy the next major move in trending markets. And the strategy is very simple. You define a clear uptrend or downtrend. Then you define major corrective levels by using Fibonacci retracement tool. If you see an engulfing wire pattern matches up with the 50 to 61% levels is a power 51% levels. It is a powerful price action trading signal like we see in the chart below. All right. So this is their strategy on how to use the simple the Fibonacci retracement. First, you need to define a clear uptrend or downtrend. Then you define the major corrective levels, which is that 50 to 61 percentile. And it was a big old black. And if you see in an engulfing bar patterns that matches up with that retracement level, the corrective levels, it's a powerful price action signal. Right, so here we go. Uptrend or downtrend. We can see that it's an uptrend. So we're looking for support. We're looking for to buy, right? We put our fibs on, right? How you put your fibs on, we'll get to that. I'm gonna get to that. But our 50 to 61 is normally that golden area. If that engulfing bar is formed and that engulf that 50 to 61%, and take the cam bite. What are you doing? Right? In the example above, the engulfing bar price action signal matches up with the 50 to 61% Fibonacci retracement. The resistance level then becomes support and another confirmation to take the high probability setup. This trading strategy is very powerful. Here's another example below that illustrates the power of 50 to 61%. All right, so this is the resistance, right? We can see it's clearly a downtrend, lower lows, lower highs. Price breaks, bounce back, three traces, give us an engulfing bar. Also lining up with that 50 to 61 percentile, right? That support then becomes resistance and take the damn sell. All right. Trading the market from 50 to 61 Fibonacci levels means you are trading from better price levels. As a result, you will put as many probabilities in your favor as possible. And that will allow you to become one of the most successful traders. All right. So let's find this with our 50 to 61. We only got 15 seconds. Okay, yeah, this is, I want to find a good one for you. Okay, so this may be a good one. Let's see if we get an engulfing bar inside of that. So if we are fibbing to go to sales, oh, it didn't, it touched it only about a little bit. If we're looking for sales, we look at the previous swing point. So it'll be from high to low to go down versus when we are buying by low to high. Same thing on how we look at when we're looking at candlesticks. Everything that's at that bottom, the support, when it goes like bullish, because we open up here and we close here. Our swing points for our buys, for our Fibonacci, we buy, and then of course price may be up going this side. So it's because it's making higher highs and higher lows. So we buy. You looked at you get that first bottom. So something like this. I'm just gonna do it like this. From your low to your high, you buy at those swing points, or if you're selling from the high to the low, damn, go. All right, let's see if we get in. Okay, so There's more of a harami there, and tweezer tops. I want a good retracement move to fill out for you. Okay. Okay. She she then goes and retraces again, but or even if we do this move, still in the 50%, still right here of that actual move. So even if you want to do it like that, still within that 50 to 61. But I don't want to confuse you because they give us new swing points to get to. But in this case, this was the highest. Besides all of this, this was the highest. So our high to our low. I'm going with the trend. So once the first wave has been made, we're waiting for the corrective. We waiting for the retracement to happen. She did retrace. It did tap this 50 to 61 percentile, right? All right. Um, however, it did give us one. It gave us a bearish engulfing right here. However, she didn't sell down as much, but she did create a new lower low. But this is a good move still. 50 to 61 percentile. She actually came up in this move again, but we're gonna get to that. But here we have, sorry, here we have bearish engulfing. We make this red, all right, in our 50 to 61 percentile. Take the trade, even if you wanted to wait after the close of the candle. We haven't talked about stop loss yet. All right, over a 2 to 1 risk to reward. Okay, 339 pips, my guys. And she came back, right? Say, for instance, we making this all one move. Came back into this 50 to 61 area. Okay. Gave us another bearish engulfing indication. Sell, retest, boom. Like, get in the sale. What are you doing? What you waiting for? Okay. That week, 150 pips. That's crazy. But let's see how much we make. Even if we just take it to the 0%, right? 3 to 2 versus that 3 to 1, 537. Still good. High probability setups, still good risk to reward. We've only used market structure, candlestick, Fibonacci retracement. The other one was market structure, the moving averages in a bullish engulfing. You see how you only need really three confirmations to get into whatever you're getting into. And hey, add that support and resist. We can see that 21 or the 8 moving averages acting as a dynamic support and resistance. So you don't even need it. You can use, we've seen in the previous ones how they use market structure, they use support and resistance, they use bullish engulfing. So you have 3 strategies. Whichever one that you prefer, use it. And we still got more strategies to go. We still got more strategies to go. I ain't gonna talk your head off though, and I'm gonna let you enjoy your Juneteenth. All right, but we went over moving averages. We went over Fibonacci retracements. These are just different ways of how you could be able to do it. Next is trend lines. Next is how to use an engulfing bar in a sideways market. Next, how to use the engulfing bar with supply and demand levels. And then they give you your management, your money management rules. Hey, I know you know how to trade. Hey, let's talk about the money. Let's talk about your money management. What are we doing? The Holy Grail. Get in this book. Get in this book. Stop playing to get in this book. Do your homework. All right. Um, if you're not already following me, I was about to say, I hope I was not recording this whole time and the screen share was not on. But if you are not following me, make sure that you follow me at Mara the Goddess, MaraTheGoddess, and two number twos. Yes, I know it's Wendy and Goddess. So I want it to be. Right? I love you guys. We'll see you guys in the next video. Come prepared. Come ready. Come ready. Come ready to change your future. Right?